Good evening. This is Startup Central right here on ET Now. With me, Avanne, Dubash, the show focused on entrepreneurship, new age tech, and all things to do with startups. Game changer when it comes to Bitcoin, but some as well talk about how it's perhaps a historic mistake. There's two sides of the story, but let's understand what exactly this move means for players within this space. Joining in on the show right now, we've got Mridul Gupta. He's the COO at CoinDCX. Thanks so much for taking time out, Mridul. A lot of experts are hailing this as a huge positive for the institutionalization of Bitcoin as an asset class. How exactly are you looking at this move of really democratizing access to cryptos and this asset as a whole?
Sure. No, this is definitely a very, very big milestone. And the entire industry in crypto and the entire financial services industry has been waiting for this moment for the past entire year. We have seen multiple back and forths around it. To begin with, this basically opens the asset class to people who have been waiting out to participate in the Bitcoin price appreciation phenomena. A lot of institutions, a lot of retail demand, which was waiting and was not clear if they should directly buy Bitcoin, are now more comfortable buying the ETFs because they already have a registered account with their brokers. They have gotten some kind of regulatory clarity. They have gotten some kind of compliance clarity. So it's definitely a very, very big phenomena. We have already seen the price of the Bitcoin move by 60% or 70% or so in the past quarter, October to December. We anticipate this push to sort of also result into more price appreciation as we step into 2024 and see more retail and institutional demand making the price go up.
Right now, Mridul, you also have Standard Chartered analysts who've actually said that ETFs could draw as much as $50 to $100 billion this year alone. Some analysts are saying it's a lot more conservative, maybe $55 billion over the next 5 years. What's your assessment in terms of the kind of flows that we could see from ETFs?
No, this is definitely in the right ballpark numbers. So I'll tell you the biggest problem with the industry today, which is that institutions have still not participated in the Bitcoin or the crypto industry to that extent. We are already around $2 trillion industry, but with institution participation, this becomes even more strong, even more bigger. For institutions to participate, and especially the US institutions to participate, which are the giants, you need the products which are offered on an exchange, which have certain more transparency with respect to the things the institutions can do. So with the ETFs coming in, we definitely see a lot of institutional demand coming in the market. We also see retail demand coming into the market, and these retail demand is people, for example, who would have created their account on brokers like Charles Schwab, on brokers like Robinhood, on brokers like Public, but they have not yet created the accounts on crypto exchanges. So for them, suddenly with the same account, they can tap into the crypto price appreciations by buying into ETFs. So it suddenly unlocks a very huge market, which has been waiting on the fringe. And we definitely anticipate the inflows of around $100 billion plus coming into the market as we witness 2024 though.
Do you think that now we could see a complete increased choice for investors who actually want to engage with cryptos, that now investors who are maybe sitting on the sidelines or maybe thinking, no, I won't look at this as an asset class, too risky, will now become a lot more receptive, your view?
Yeah, definitely. So this ushers in new wave of investors who can now participate, who were earlier waiting on the fringes. They were not yet clear because sometimes they would want to create an account, but they're not yet clear if they can easily create an account, if they which crypto exchange should they go to, etc., etc. Now with the ETFs, number one, they can open the account and they can buy ETFs on their existing brokers. Number two, with the larger institutions coming in, they are also the retailers who have been waiting on the fringe are also more aware that this is an asset class information and we can put our hard-earned capital in this asset class. And we see two things because of that. Number one, more investors coming in, but also more capital coming in from the existing investors.
And some regulatory experts actually believe that Bitcoin ETFs can also pave the way for other innovative crypto products. Do Do you believe that we could see that? And if so, what kind?
We are already seeing a lot of innovative products, and believe it or not, Avanne, like these products are on blockchain as well, and these products are being positioned as more ETF style as well. The other day, I was talking to someone who was digitizing the US bonds and US Treasury, and anybody in the world can buy US bond and US Treasury with this digitization and it being available on blockchain. So I think the sentiment is largely very, very strong, very, very positive with this news. This opens new products in the crypto market. This opens new financial products on top of crypto markets, right? So it opens both the markets as we move forward. For example, the ETFs right now are spot ETFs and they run primarily on Bitcoin. We could also witness spot ETFs on top of a basket of assets. It could be Bitcoin plus USDT plus ETH plus something else, right? We could also witness futures ETFs. So that is on the ETF side where we could witness more and more products. We could also see portfolio management services as a market coming up as more and more people enter the market. And on the other side, on the blockchain side, we are seeing a lot of DeFi products coming up, which allow you to lend, borrow, which allow you to trade seamlessly on DEXs, which allow you to invest in real world assets with the help of crypto, like the example of US Treasury I was giving. We are also witnessing an era where a lot of real world assets are getting digitized on blockchain. So you can invest in a real estate market in Dubai. You can invest in a part of a building by buying the assets of that building on a blockchain. So definitely a lot of new products will start coming in the market as we see more investors coming in the market, because now there's more interest and now there are more people to offer your products to.
So for CoinDCX itself, what exactly does this move mean in terms of the incremental flows that you're expecting? What does it mean for the company as a whole?
The volume is a function of multiple things. ETFs obviously solve for a lot of new demand coming in the market. It also solves for the perception in the regulated domains, in the compliance domains. So we see expedited actions on the regulation and the compliance front in India. We also see more and more people entering the crypto ecosystem because of the positive news around the market. And this positive news, obviously, ETF is a big news. So that obviously makes a lot of people reconsider Bitcoin and reconsider other crypto assets for their investment. At the same time, the price and the regulation and the compliance work which has been done by the players also helps in setting that charter. And we see more and more people coming in the platform in 2024.
And finally, according to you, what's the road ahead when it comes to cryptocurrencies as an asset class, in particular, how you're looking at it growing in India? Because, the view seems to be very divided.
It definitely does. We are at a point where the countries are in the race of who gets to regulate first or who gets to build a compliant framework first. We have already seen compliance framework emerge in the Middle East. We have seen US come up with guardrails around the investments and trading in crypto. We are now seeing Europe warm up to the idea of regulation, and their deadline for putting up a regulatory framework with the help of MICA is around end of 2024. We are seeing similar regulation frameworks appear in South Africa, Nigeria, Turkey, Indonesia, Thailand, etc. I think if we talk about India, we have very early framework in the form of PMLA compliance with the help of Financial Intelligence Unit India. We are now engaging in more talks with potential regulators, policymakers, and think tanks of the contours of regulation, of the framework of regulation. We definitely see that as a very big trend in 2024. So compliance and regulation is one of the pillars on which we built CoinDCX, and that pillar will continue to get strengthened as we see more regulatory frameworks coming in 2024. Number one. Number two, a lot of people feel that compliance and regulation is not right. We have always taken a contrary approach. We have always believed that compliance and regulation gives you an advantage in this industry and makes you succeed in the long run. Because of that, if you see the past 30 days to 90 days behavior on the platform, we have increased our volumes by a factor of 5. We have increased new user onboarding by a factor of 3. We have reduced customer query, customer problems by a factor of 5. So we are seeing a lot of streamlining on the customer experience. We are seeing 3 to 5x more customers participating, and we have seen for the same customers which we had onboarded, 3 to 5x more capital coming and churning on the platform. So we continue to expect that same trend follow at least for this quarter. I can't comment over the entire year, but fingers crossed for the entire year as well.
All right, Mridul, thanks so much for joining in. Good to have you on board.